Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar bid-tone extends into a new week, while the US dollar, which tracks the greenback against a basket of 6 major pairs, was up slightly around 96.10 as the US Fed officials continue to indicate future interest rate hikes. That is to tame record inflation. On Friday, New York Federal Reserve President John Williams said he sees the central bank steadying increasing interest rates amid high inflation and labour market recovery, while St. Louis Fed President James Bullard said on Thursday that the bank is more than 300 basis points behind its inflation target. Also, as the Russian-Ukraine and conflict continues, as the market now turns to the meeting with Russian Putin and also Joe Biden, American president, we can now see that there is a bit of a stronger play into the start of this week. But I think the bulls will be careful because last time we got close to that 72.50 level was rejected, and previously before that. So no doubt we might see a similar price action and see the market take a downturn from there and back towards the short-term support around 71.70. The euro, well, it's attempting to recover again like previously when it fell close to that 113 level. In light of the pattern though, I feel the market will probably challenge up towards that level around 114 but fail and look back towards the downside of 113 and eventually down to the 112 area. Dollar yen's taken another look at that level around 114.70 as safe haven demand continues, especially into the meeting between the US, the French president and also the American president. If this happens, then we might see a slight extension to the downside, not at 114.70 but down towards the region of 114.1020. Either way, we're getting quite close to where take profit or demand may return, and we could see a bounce from there. Sterling still maintains in a 134.60, 136.60 band, but nevertheless getting closer to the top side of the range. With much talk into March, which is only 7 days away, at the end of this month, that could see further risk, that is, from the markets as more hawkish talk continues. Let's see if the market can clear this level, 136.60. However, like previously, it was rejected, so the market will be a little bit careful as it gets closer towards that region. We're getting still a little bit heavy as we get closer towards the level for the sterling Kiwi at 202.30. The market is pressuring this support region, and if we see a break, then I'm looking towards 20000 as a potential target. Finishing up with gold, well, the market took a stab at that top side this morning and didn't thought twice about it. It didn't actually like being up there above 1,900 and found a good retreat. Now, continuing on, is that this bearish divergence is clearly evident. And if we see a break of 1,879, then I expect to see a heavy candle down to 1,844. And talking of bearish divergence, since last week, the market still holds to a negative pattern for oil. And that is, the market may actually find a little bit more pressure into the start of this week due to the rejection at 91.5 this morning. If so, we are looking down towards $86 a barrel, which is the call, and still holds at this present stage. Well, that wraps it for the day. Thank you very much for joining me, but please look out for tomorrow morning's early report.